Okay guys, welcome back to me again, and now I would like to read the article. But before that, don't forget to like, comment, share, and subscribe. Okay, the title is China and US Agree Deal on Audit Dispute. Hong Kong, Washington, and Beijing have reached an agreement allowing US auditor to inspect China-based content. The first step in a process that could prevent around 200 Chinese companies being kicked off American stock exchange. Samuel Siu, market specialist, GG's GIMB Singapore. This is seen as a positive first step. However, things are not fully cast in stone yet, as seen from the various sudden reveal sites in the past. KNG Securities Strategies China ever bribe Securities Hong Kong. I think if the agreement is finally to be reached, the market sentiment will keep improving, which will support the Hong Kong stock market, especially the technology sector. For the short term, the HSI will keep the upward momentum and may challenge the 21,000 level next week for the midterm. The recovery progress of the Chinese economy will be the core factor for the stock market. Paul Leder, Miller, and Chevalier, Washington, D.C., former director of the SEC's Office of the International Affairs. Clearly, the Chinese authorities felt the pressure of possible delistings under the holding foreign companies accountable by explicitly taking the ability to maintain a US listing to the PCAOB's ability to conduct inspection of a company's auditors. Congress imposed a cost on China for its long-standing refusal to permit the PCAOB to conduct inspection of US-registered accounting firms located in mainland China and later Hong Kong. The real issue is whether the Chinese authorities will now honor the deal and provide the PCAOB unfettered access to auditors' work papers for more than a decade. The answer has been no, but now that the threat of delisting is real, it looks like the answer from the Chinese authorities might be different. Winston M.A., adjunct professor, New Law School, this is a complaints issue, so the implementation of this framework in the coming months will be the key to the success of this complex cross-border setup. Marcia Ellis, lawyer at Morrison and Forster, Hong Kong, will expect that Chinese headquartered companies with sensitive data that haven't yet listed will favor listing in Hong Kong even if the PCAOB issue is resolved. In addition, listing in Hong Kong also insulates companies from what might continue to be a continuous relationship between the US and China in the next few years, even if the PCAOB issue is resolved. Thomas Hayes, managing member, Great Hill Capital, New York. A long time coming, this has been a hug overhang on Chinese, causing some of the higher quality business like Alibaba to be mispriced for some time. As the deal moves forward and the fog is lifted, many of the stocks will have significant appreciation, not because the business changed. The big tech platforms have weathered the pandemic and crackdown fairly unscathed fundamentally. But because the uncertainty has been removed, inviting investors back to growth. Zhang Zihua, Chief Investment Officer, Beijing Uni Asset Management. Okay guys, that's all from me. Thanks for watching me, and then don't forget to like, comment, share and subscribe. See you soon.